Hello, this is Phil at the Laptop Trader channel on YouTube. Welcome back to our community. Getting here to share my experience once a month and give back to you guys one video at a time. uh, Again, this video series will cover market cycles, stocks and ETFs, and technical analysis, trade entry, trade management, and risk management, and how to create confidence by putting the odds in your favor. Good luck to you. Again, my email contact is laptoptraderphil@gmail.com if you have any questions. Caution, most stock traders lose money, so please protect yourself at all times. Nothing discussed in this video is trading or investing advice. Okay, this channel is for information purposes only. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in markets. So for our November 2024 agenda, just a quick overview of market ETFs. We'll review those like we do every month. Again, it's coming up to the end of the year. There's only one more month. So if you've had any topics you've had issues with, you're welcome to email me and we can try to answer those questions for the end of the year. Then reading the charts and how to make money and why, kind of why we use charts even. Scanning for new ideas and how your scan affects your results. So a lot of our time as traders, especially technical traders, is scanning, looking for new ideas. So I'll just cover a few scans that I've used that are helpful. And finally, what would you guys like to see for the last video of the year? Is there any topics that you're wanting addressed, or any topics about trading or stocks that you had questions about? And what would you like to see for the last video of the year? And a reminder before we get to charts about the 4 stages of trading or investing, and I think these stages affect any product or service over time. Just think of different automobiles that kind of come into popularity and then go out of popularity, and then the car makers bring out new models, right? And these are just some basic patterns that we use to enter trades if we were considering going long, or if we're looking to buy, expecting price appreciation, kind of where the buy point would be. Just a quick drawing of different patterns that we may see on these charts and where that buy point would be. So let's get to some live charts. Again, thanks for watching, liking, subscribing, and sharing this channel. It's been a fun year so far. Let's take a look at our ETF list. I just use barchart.com. I think it's an easy service to use. They've got free plan, low cost plan, and then a premier plan. But if you use these flip charts and you create some lists, you can look through quite a few charts very quickly. So let's start with Bitcoin in US dollars. Bitcoin just made a high this week of over $90,000 per Bitcoin. So that was really impressive for not only Bitcoin, but probably other cryptocurrencies have had similar moves. Now, when it comes to reading charts, you can start with a lower time frame chart. This is a daily chart over a 3-month period. So each bar is 1 day's worth of price action. Maybe if you're a day trader, you could start here, or day traders may use a 5-minute chart or something like that, or a 15-minute chart. I'm a little bit more long-term than that, so what I like to do is, some people start at a time frame and then go up in time frame and verify the trend. What I like to do is I like to start higher up. So I'll either start at a monthly chart or a weekly chart, okay? And go from there. That's just my preference, but you should be using different time frames if you're going to be a technical analysis investor or trader. So this is a monthly 5-year chart of Bitcoin. Again, you can see the new high in Bitcoin. So that would be very bullish for Bitcoin. So let's look at our other ETFs here. So this is just tracking ETFs. We use the SPY symbol, which tracks the S&P 500 stocks. So on this chart, we can see the trend, right? We had an uptrend, and a pullback, downtrend, and a sideways trend, and then we resumed this uptrend, and we just made a new high this month. So overall market, as measured by the S&P 500, looks quite bullish at this time. Next tracking stock we use tracks the NASDAQ, symbol QQQ, or the Qs. Again, similar picture over the last 5 years. And we can see we just made a new high this month in the Qs. So again, overall this looks like a stage 2 uptrend, very bullish. Now the equally weighted Qs look less bullish, and that's just because of the weighting. The regular NASDAQ index is market cap weighted towards the larger companies. But when we look at the equal weight, it's a little more sideways. So this includes, or it gives equal weight to each company. It doesn't treat it like, some small company is as powerful as Apple is in the marketplace. So when it comes to weighted indexes, that's kind of interesting to see that. But it's just a little bit different way to view it. Overall the Qs are bullish, right? Large cap tech is bullish, whereas the equal weighted is a little more sideways, but just made a new high this month. So that's the only difference between those two ETFs. The Russell 2000 is tracked by the ETF IWM. Also came through a period here of the last 4 months where price consolidated, almost formed that wedge. And now this month broke out. So it looks very bullish for the Russell 2000 and, in my opinion, the stock market overall and the economy overall. So this index, these 2,000 companies, is a more broad-based representation of the overall economy. So that looks good for the economy, in my opinion. Finally, the one last couple we look at, this is the tracking stock for Dow Industrials average, or the 30 Dow Industrials, symbol DIA. That has also been on a nice uptrend this year. Just made a new high this month. And then transports, again, it's been a little more back and forth in transports, but recently, over the last 5-6 months, has pushed up and just made a new high this month. So again, that's good for the economy. If transports are doing good and the overall, Russell 2000 is doing good, it looks like an overall bullish environment for stocks going into the end of this year and into 2025. One thing I wanted to show you guys too about the recent election is just the volatility recently. Maybe you noticed this, maybe you didn't, maybe you didn't know about this, but we had kind of a sideways, very mildly bullish trend here over the last month in the S&P 500. And then the week leading up to the election, we actually had a sell-off. Went sideways for a couple days, and then after the election came out, we had a gap up and prices made a new high. And then this week, prices have sold off. And what I think that was uncertainty about who was going to win and who was going to lose the election. And as soon as the results came out, the market gapped up. Now, I don't think it mattered who won from a market perspective. I think this was going to happen anyway. It was more of a period of uncertainty and fear versus who won and who didn't win. And I think we can see that on this volatility index chart. So we had kind of a move up in volatility and then a move back. And then move up in volatility and kind of about a 50% retracement in volatility. And then we made this high in volatility going into the election. And then as soon as the results came out, volatility just fell off and gapped down and went way low, back down to like 14 or 15. End of the week at just about 16 points. So volatility was measuring that uncertainty of the election, not necessarily the election result. And I think that's what we saw between the S&P 500 and the VIX, which measures the volatility of the S&P 500 and options on the S&P 500. So that's all I want to say about that. Not a political statement, just kind of what I think, kind of how it played out. So let's get back to our monthly charts. Mid-caps, kind of the same story. Symbol MDY, which tracks mid-cap stocks. Just made a new high. And again, you can see it on this chart a little bit clearer where we had kind of that wedge where price was kept touching that area. Right, we had price pressure pushing up and then finally broke out. And if we look at our analysis chart here of these charts, and we look at the slideshow, what I kind of see on that is, something like this number 2, this ascending breakout where we had price come up and hit an area and pull back. And test that area again and pulls back, but not as much. And we come up again and we test that area for a third time. And then we pull back, but again, not as much. And then finally it breaks out. So that buy point would be kind of right there. That's what I see on this mid-cap chart. Right, we had some pricing pressure push up, pull back, push up, push back. You can see each time the lows of these price bars get higher up. And finally it breaks out. And to me, that's like buying pressure just kind of takes over. So all the ETFs I'm tracking right now, as far as these main ETFs, between the SPY, Bitcoin, and the IWM, and transports, and the mid caps, and now the small caps, all are showing that the market is very bullish at this time. So now we can further break down the market into sectors. And here we've got the energy sector, which is more of right now a sideways trend. So to me right now, energy is kind of neutral. So right now that's just a watch. It's kind of just been in this neutral range for the last couple of years. There is speculation that the new administration will be more friendly towards energy, and so maybe that could provide some investing ideas in the next year or two in that sector. That's all I'll say about that. Financials had a very nice year. They've just made a new high here in November. Again, you can see the pressure pushing up, price pushing up. We have a wider range bar, a narrow range bar, and then kind of a breakout in October and November. So financials look bullish. Consumer discretionary also just made a new high in November, so that looks bullish. So when I say that, maybe these are areas that you want to consider individual stocks. You could buy and sell and trade these ETFs too if you just want to do sector trading. But so that's why we review these sectors, because this is where the most likely opportunities will be. Now, healthcare kind of pushed up this year and made a high in September, but since then has pulled back. So right now, healthcare is in a pullback, more of a selling phase in healthcare. So right now, if I was looking for new ideas, yeah, we could look at healthcare for some ideas, but it's more than likely the stocks within the sector are also pulling back. So we have to wait and see. Will buy and resume in healthcare, or will selling continue in healthcare? So I'd much rather look for something in financials right now, or even energy, because energy is sideways for opportunities versus healthcare. It looks like healthcare is being sold off at this time. What else we got? XLK is technology. Again, this looks very similar to the NASDAQ QQQ ETF, very closely related to that. So that looks like that is still in an uptrend. Utilities, still in an uptrend, made a high in October, have pulled back a little bit in November. Utilities have had a nice year. Industrials have had a nice year. This ETF will be closely related to the Dow Jones Industrials. Again, made a new high here in November, still an uptrend. Whereas materials have not performed or underperformed over the same period of time. So one idea when it comes to technical analysis is the idea of outperformance and underperformance, or relative strength and relative weakness. So right now, materials for the last couple of years have shown relative weakness versus something like technology, right? So this is sideways for a long time. Even though it made a new high here in October, it was a weak new high versus something that is in a clear uptrend like technology, okay? So that's the idea of relative strength versus relative weakness. Communications have had relative strength, right? Nice strong uptrend in communications. If you're looking for stock ideas, that's a good area. Consumer staples have had a pretty decent year, but have pulled back over the last couple months. So that is one area to watch and see if there's any stocks that had some strength but are now pulled back, maybe giving us a buying opportunity. Real estate has had a bit of a back and forth year over the last maybe 4 or 5 months. Yeah, it's moved up, so it's had a decent uptrend over the last 4 or 5 months, and now also real estate pulling back. One final chart I kind of like to look at is this 10-year Treasury note, because this has to do with interest rates. Right now, 10-year interest rates are at 4.42, and we can see that's significantly lower than the high, which was at just under 5 at 4.99. So long-term interest rates have come down somewhat, about a half point over last year. So that's all I will say about that. Interest rates affect everybody that wants to borrow money, including the government, corporations, and individuals. So over time, as that interest rate comes down, that is seen as good for borrowers, but not so good for savers. So that's all I'll say about that. All right, that's enough of the ETFs. That's enough of our market overview. Again, overall bullish on the market overview. Let's look at maybe this week's list. Yeah, let's take a look at this week's list for some other ideas. So this is just a broad-based list I look at, and again, we could start with either the daily chart and then look up in time, or like I said, I prefer to kind of go out in time, maybe a weekly or monthly chart, and just see what's the trend, right? So on this chart, this is Checkpoint Software, symbol CHKP. We can see we've got a nice move up here this year, stage 2 uptrend, and now earnings came out. We had this big selling bar. So when I see that, I like to go down in time frame and see just how much selling took place. And we can see there was a significant amount of selling after this earnings report. And so to me, that's like a warning sign or a cautionary bar or candle. And that, to me, that says watch out, danger, watch out, that more selling could be ahead. Because that is by far the biggest bar on this chart. It looks like prices plateaued and now everybody's taking profits. So that's not one I would look at to go long. That's not one I would look to buy at this time based on that chart. Google, overall nice uptrend, right? In the communications sector, probably leads the communications sector and has made this kind of turn up. Not a very strong turn up, but nonetheless, I don't see a lot of selling in Google going forward. Amazon, very strong uptrend. Just made a new high in November. Uber, not as strong. Right, we had a strong uptrend. Now we went sideways. This almost looks to me like a stage 3 plateau where we made a high, came back here, and then tested this low, and then came back and made a weak new high and a topping tail. So this looks to me like it's going up, hitting the high, coming back, retesting the high, and now failing. So that's more of a stage 3, or at the very least, a consolidation towards the highs. So Uber right now for me would be neutral. I would like to see Uber, get some more buyers interested in Uber. See if price pushes up or does price move down out of this range. Because if it starts moving down, that's not good for Uber. Because there's no dividend on Uber. It's just if you buy it here, the only way you're going to make money is if price goes up. So Uber's a watch, possible stage 3. Creative Realities, clear stage 1, just kind of flatlined here. FLR, Fluorocorp, nice stage 2 uptrend. Ryder, also a very clear stage 2 uptrend, very strong stock. I like that, prices slowly moved up steadily over time. Volume has been steady, not heavy signs. So this is just people buying and holding Ryder for the long term. There's no pressure to sell. It pays a nice dividend, right? And people are buying and holding Ryder. You don't see any fear in that chart, in other words. And they pay, at today's price, they pay 1.81% dividend. But when investors bought back here, the dividend probably would have been over 3%, right? So investors buy low, lock in those dividends, and they get the best of both worlds. They get dividends and price appreciation. I think that's what you're seeing there in Ryder. Versus this company, Vertex, this would be more of a growth story, right? Where at one time it was a $11 stock, and then it kind of went up, became a $20 stock, and now it's closed the week at $49.10. This is a nice growth story in Vertex, symbol VERX. I do want to say something about this stage uptrend. It's definitely stage 2. Made a new high, but it's getting a little bit extended. So the question is, would I necessarily buy Vertex right here? And the answer is not necessarily. A better location to buy it would have been here when it was kind of close to these 20 and 50-day moving averages, right? And then it moved out of that range, went sideways, retested the 20-day moving average, and then gapped up on earnings. So let's see if we don't get another week or so of consolidation, or maybe a pullback to maybe 45, 45.50. Then I think that would be a better buying opportunity. Right now it is a little bit extended on the monthly chart, but overall pretty good looking chart. The problem is if you buy it here, is that so many times you buy it this high and it retraces against you, and now you're showing a loss on your stock trade. That's the only reason I say that. 10-cent music, not a bad looking chart, but definitely some selling over the last 6 months. That'd be a watch. Eat, Brinker International. It's a restaurant group. Now, interesting thing about this is this again. You can use stocks as a broad-based indicator of the economy. Well, according to this chart, people have been willing to go out and eat, just like they were willing to take Uber. So this is interesting. It looks like the economy is actually doing pretty good if people are willing to go out and eat. This stock represents like a restaurant group. Just made a new high, extended. This is not one. Definitely would not buy this one at this time because it's just too extended. And I'd like to see it come back and give me a better purchase price on that stock. But overall, a nice uptrend. And you get a nice uptrend. LRN stands for Stride Inc. Nice uptrend. AT&T, and again, nice uptrend this year for AT&T. So again, AT&T, this is where we're value investors. We're looking to get some value. Look at the dividend yield on AT&T even after it's had a nice year, still a 4.89% dividend at this week's price. So people that bought it back here were definitely getting over a 5% yield on AT&T stock. Plus, they've got the best of both worlds. They got the price appreciation too. So there's no reason right now to sell AT&T for these big investors. They're just going to hold it, collect that dividend, and call it a day. So there's no motivation to sell AT&T, and that's why I think you've just seen price go up this year. And something like AT&T, I think you're going to start to see that out of some of these other companies too. Now the reverse of that is something like ADM, still in a clear downtrend. So there's no reason to buy ADM yet. There still has to be a reason to buy ADM. UPS is starting to get that point. I think where, especially for value investors, like they like those yields. UPS could go either way though, could go up or down. But right now, UPS has paid a very nice yield, and it's a solid company. Versus this one, right, more of a sideways trend, kind of a range or a stage one range, right, back and forth. You got something like Snap, tech company, Snap, is just flatlined across this, closed Friday at 1060. It's been in that range for like a couple of years. So what else we got? We got an oil company like MRO, Marathon Oil, been in a sideways. You can call this stage 3 or stage 1. And will it go up on a stage 3 or down? That's the question on Marathon Oil Corp, and a lot of these energy companies, similar story. Versus something like Tesla. Clearly has had a nice year, right? Very nice year. Was in a stage 4, went back to stage 1, and now has resumed or came back in a stage 2 buying. For me, it's too expensive, but congratulations to those that bought and held Tesla through this period. Nice job. So there's always opportunity in the markets. If you guys look around, I wanted to address, how can your search results lead you to some good opportunities in stocks? Well, different platforms are different, but if we look at on this platform bar chart, if we look at stocks, there's different screeners that are in here that are already populated for you. So you could look at something like, you could create your own stock screener. But there's some other interesting ones. Like here's an interesting one. Okay, 5-day gainers. These are stocks that have had big gains in the last 5 days. Okay, and you can sort that by their percentage change. So in this case, symbol PLAG, which stands for Planet Green Holdings Corp, had 150%, 156% change in the last 5 days. Okay, its last price was $3.85. So on this sort, if you use this sort, you're going to have to expect that you're going to get some penny stocks. Okay. This is where your sort can really affect what you trade. So let's just take a look at a few charts. So you can see this huge movement in price, right? It was trading back here at, like $1.50 a share, then it went up, came back, tested that area, and then exploded out of that area. So even though these are small dollars, going from, opening here at like $1.61 and closing a few days later at $3.85, that's a huge percentage change over 5 days. And that is the type of opportunities that you will get out of this sort. You get penny stocks, you get these big moves over a short period of time. And if you're not already in them, I would not encourage you to get in them at this point because they're a little bit too far too fast, right? And it's easy to get burned on these penny stocks. This one's a little bit different because it's been up and then it pulled back. It gave us a buying opportunity, but then moved up. Now it's up for 1, 2, 3, 4. It's up 6 days in a row. So that's still, that's still pretty far. 6 days in a row. You want to see that pull back and then maybe consider buying something like that. And it's a new stock, right? It just became a publicly traded company on 10/15 of this year. So this is a very new company. You definitely have to do your homework on that. But this is the type of stuff you'll get with this kind of sort. Newer companies, penny stocks, lower price stocks that have made big moves in the last 5 days. Probably companies you just haven't heard of. I'll just flip through a few more of these so you can see. Now that's a foreign company. If you ever see something you don't recognize and then it says SAADR, that's a foreign company. Which is okay. You could invest or trade foreign companies too. Here's a bank, a cheaper bank. This is, I believe, Wells Fargo. Yeah, so Wells Fargo is in this list too. So there's a big company in this list. So if you're going to use that type of sort, just be prepared for companies you haven't seen and use some caution, okay? If you're going to trade these individual stocks, use some common sense. Now, if we go to a different sort, if we go back to the stock tab and click on it, there's different tabs under that where you got stock market overview, market momentum, market performance, and other sorts already in here for you. So you can also look for something like a gap list, right? A gap up and down. So this would be gap up, or if you like to trade short, you could go gap down. So let's just look at gap up. I basically don't short stocks. Nothing wrong with that, but it's just not for me. So here would be a gap stock. It had a big gap, right? So the problem with trading a big gap is it tends to retrace against you. And some gaps will gap and go. That's just what you could expect from that type of a sort or that type of a stock search. So this is interesting. This is on the gap up sort, but it gapped up and then left a big red candle. So it gapped up at the beginning of the day and then sold off the rest of the day. So if you bought that gap up, like, oh man, this thing's going to the moon, if you bought here, you lost money. So that's the problem with the gap sort. Just be careful if you're going to buy a gap. Don't buy a gap that's so overextended that you get crushed. And that's what happens to a lot of these stocks. They gap up and they get sold the rest of the day. Now this one's not as bad because it gapped up to here, was green at one point in the day, and then sold off and ended red. But if this showed some more consolidation over a few days, yeah, maybe I would consider that. I don't recognize the company at all. So a lot of times you get a lot of new companies in these gaps. That's not a bad looking gap there. Now where it gapped up from $4 to $4.70. That's not so extreme, right? That's a more reasonable gap up in price. That was not too bad. You got to remember percentages now. If you're going to trade gaps, if you get something that's already gapped up 20, 30%, be careful buying that. There's a high probability it's going to sell back against you. That's not too bad. That gapped up and closed green. It was even a bigger bar at one point in the day. That's not too bad. And that's only $3 stock. So again, you can expect some penny stocks in these sorts. But certainly big companies also gap up. I know Facebook is known for gapping up around earnings. Tesla is known for gapping up or down. So big companies can gap up and down too. I don't see. Trying to see if there's any. Yeah, here's a major company, Alcoa Corp. So that's an aluminum company that had a nice gap up Friday, but it gapped up into what would be resistance there. So that's not really viable in my opinion. What else? Can we recognize any other companies? I don't recognize that one. Don't recognize that. So you get a lot of these oddball companies in some of these lists. Just be careful because these companies can gap up. They can also gap right back down. So Evotech, I don't recognize that one. PDD Holdings, I don't recognize that. There's a medical care, ADR. ADR is a foreign company. I gapped up on Friday and made a new high. So that's a more reasonable gap. It kind of came up. There's resistance, and gapped out of that resistance, made a new high. That's a little bit better looking gap. But So let's look for one more search, and then we'll close up to this month's video. Hopefully this has been helpful to you. You can also look at something like most active, like something like price and volume leaders. Let's see what that gives us. All right, so that gives us 200 stocks we could look through. We just go to flip charts, get a quick chart. Here's Tesla, price and volume leader, obviously. Nvidia, Amazon, obviously a price and volume leader. So this sort is going to give you these major companies and what's going on with these major companies. Microsoft, Apple, Palantir, Meta, MSTR, MicroStrategy, APP, which is AppLovin Corp. That had a nice move. Had earnings, moved up, went sideways. A little bit extended from the moving averages, but consolidating and holding those gains. So, depending on what price stocks you like and you're comfortable with, will probably determine your sort. If you're comfortable with expensive stocks, major companies, this would probably be the sort for you. This is giving us all of the major companies. Here's Coin, like Coinbase. That's been very popular this year. LLY, Eli Lilly, drug company, just made a new low. Google, Disney. So this sort is going to give you major companies that you could trade or invest. Anyway, let's wrap up this month's video here. I think I'm losing my voice. Apologize if there's any weird audio quality. I've got a little bit of a cold and we've tried some new recording equipment here. But that'll be it for this month. Hopefully, I'll put my email contact back here if you guys have any questions, comments, concerns. You can contact me at laptoptraderphil@gmail.com. Goodbye. We'll see you in December 2024. Have a happy Thanksgiving.